Morning, everybody. This is what uh, IBD classifies as follow-through day. For day traders, maybe not so much of a big deal, but for swing traders, this is important to recognize. So as we do every day, start a morning briefing looking at the calendar for the day, getting a good idea of what time of day there could be interference or a shift in sentiment. 8:30 and 10 o'clock. Now the 8:30 one, it's so close to when the bonds would open normally that that'd already be standing aside at that point. But this could reshape the rest of the day, the rest of the week. So keep your eye on the follow through day. A couple hours left and the week is done. The exuberance yesterday from the positive bank earnings. It's a great kickoff to the anticipated quarterly reports that are going to be coming out. They kind of set the tone. (8:30) and 10 o'clock. I really think these are going to be heavily scrutinized. They're looking for a way to be able to identify that this inflation is not so transitory after all, and kind of supports the idea that the Fed needs to speed up in its taper projections. That massive rip your face off rally yesterday, we haven't had a day like that since March 5. If you wanted to go back to March 5 and see what that looks like, we got very close to a 2% move yesterday. Close doesn't count. 1.91%. So we didn't make it, but we got really close. A typical really good rally is going to hit somewhere between 1, maybe 1.5%, 1 3/4. So we didn't quite hit 2, but there is the weekly expected move right over our head today. It almost becomes gravity in the SPX, not the ES, the SPX. The SPX is the most accurate product when it comes to weekly expected move. Probably going to be putting on a butterfly today just for the end of the day, targeting that level since it generates so much. It's like an old school pinning technique. All right, so one thing to recognize is after that massive move yesterday, when the market opened up last night, it continued to go. Overseas and around the world, it continued to go. Right? That's a really big deal. Sometimes we argue about the chicken and the egg, which came first. Did we, press our will into the world and then the overnight session continues off of what we started, or vice versa? Do they start a move either up or down, and then it bleeds into our market the next day? Well, this absolutely started in America and then went around the world. We didn't dump back down. That's a really big deal to recognize. When it comes to fast moves in the market, linear regression is a big deal. And with linear regression, it usually comes down to this concept that if we move too far, too fast, the market will create a liquidity vacuum and dump back down to fill that vacuum, to fill that void. That didn't happen. It's a really good deal. For today, we really want to distinguish where we do not want to trade. I mean, we kind of was having this discussion yesterday in the futures room of recognizing what junk looks like. That if you find you're losing more often than you win, perhaps get it into your mind that you shouldn't be able to trade every single day unless you're a skilled market technician, right? If you've got years of experience and you want to go in and trade at any point at any time, you probably have enough strategies and trade logic to do that. Otherwise, if you're newer, you probably only have one or two strategies that are reasonably effective, and those one or two strategies won't fit into every kind of market environment. Find out what environment your strategy belongs to, and then recognize if this is the kind of day where you can do that strategy. Range-bound markets are difficult. So if you are losing more often than you win, quit trying to trade in range-bound markets. Quit trying to trade junk. It's not the idea that we can't trade in that environment. That's not true. Of course we can. It's the idea that if you're losing more than you win, you obviously don't have the skill set to trade in that environment. Find a place where you do have a skill set. Work on that. And as you get better, then you can trade more markets. Right now, we're looking for a Globex breakout above the high of the current Globex high. There's nothing out there unless we start really going into the higher time frames. We got the weekly expected move. That's our gravity point. Past that, we have this peak from back here. It's important to recognize this peak because there is a lot of liquidity right there, right? We haven't visited that area yet. And when we do, we're going to have a ceiling of orders there, right? Back here, there may have been some liquidity there, but when we revisited that spot, we wiped those out. Since then, however, we have not been back to this spot. Same thing with this one here. When we get there, of course, we don't have to worry about that today, right? But when you're marking your lines, recognizing, like right here, when we reversed sharply, trapped traders there, left a lot of liquidity there, we had not yet come back to it. And when we finally did, we broke through it, right? We went right through it like there was nothing there at all. That's how powerful the move was yesterday. Weekly expected move is over our head. Then we've got this pivot point at 44.71. Beyond that, we just want to maybe tag a few of these roundies like the 4,500. It's hard to believe we'll get that kind of follow through today. You can see we're already up near a 0.5%. Keeping that 0.5% or maybe even going, right up to 0.50 is not out of line. I don't think we're going to really do much beyond that weekly expected move unless the econ data that comes out this morning is really, really good. And I don't expect it to be really, really good. Right? I really don't expect it to be bad either. I guess we want to kind of put that in context. I don't expect it to be bad. I just really don't expect it to be that good. A rejection back down will deal with this low, this pivot low that I've already got marked with the box. Then 44.25. Then we will deal with yesterday's range. Just leave this line here on there. It's good enough. 44.20. Beyond that, maybe coming back down to this intraday gap. That was a phenomenal move. An explosion in tape. Now, if you have any kind of replay system where you can go back and watch that, I think you'll find it significant. I don't expect this kind of negative move unless we get a news that makes it happen. Just on its own, we're not going to go in that direction. So it's going to have to be from the economic news that comes out this morning. Either and Goldman could be reporting right now. I don't know. I don't watch news when I'm streaming, but either a bank report comes out that really rattles the market, or the economic data comes out and rattles the market, and we begin a downward move. Other than that, I don't see a downward move being on the table. It will more than likely be that we stay range bound, right? And the idea behind marking out that range, just go out to your daily chart. It's the easiest way to get it done, right? That way there's no arguing about, well, should I mark the 4 o'clock close? Should I mark the 4:15 close? Maybe I should mark the 5 o'clock close. Just go out to your daily chart and use whatever your broker's using. There is the close right there. So we could focus on, yesterday's close or yesterday's highest high. They're really so close together that for today's discussion, it wouldn't matter. Mark either one, it would be fine. And that little trick works on all brokers. That way you don't have to worry about, well, which one should I mark? Right. So once you have those levels marked, you can see that's where price already respected that level. When we opened in Globex, we kind of dithered around at that range, broke through it, and then we've just been testing against it. So we've got a very tight range. We absolutely will not finish the day in this sideways range. We're going to come out of this thing. And be thinking about that. From the high, you want to run it back down, or are you going to stand aside looking for a breakout? From the lows, are you going to run it back up, or are you going to stand aside and wait for it to break down? If we do break to the upside, where are we going? 44.55. If we do break to the downside, where are we going? Back down to this previous low at 44.25. 25.55, nice, easy round numbers. NASDAQ. More volatility here, but still holding a range. Using the box is just a nice way to get things done. High to low inside the Globex. There is our range for the day. Obviously, we're not going to stay in this range, but if we were looking for a line in the sand that says, well, I'm not going to trade unless, you could draw just a simple little box like this and say, well, I'm not going to trade unless it gets out of that range. If it gets out of that range, then I'll think about it. Right now, we have we've left yesterday's range, so we're not inside the range of yesterday's price action yet. We are starting to get some lower highs, even though we are also looking at higher lows. So we're starting to form a bit of a wedge. We know we cannot stay in this range for the rest of the day. I say that, but I mean, okay, price can do whatever it wants, right? And there is nothing in the world that says it can't stay there. It'd just be very, very unlikely for a market to do that. If it does do that, you probably don't want to trade it. It's going to be very choppy, very nasty, just wishy-washy price action, no follow through. It'll just be difficult to trade. If you, felt like you left a lot behind yesterday and you tried to trade yesterday afternoon and you got kicked in the face a lot, then you'll understand exactly what today's kind of price is going to look like. It'll look like yesterday afternoon. Yesterday afternoon was tradable. We even was having a few trades in the futures room yesterday in the afternoon. Yes, it is tradable, but you're not going to be looking at 25-point targets, and you're not going to get those big moves. No micro 1-minute flags, nothing like that, right? Just realize the kind of market environment that we're expected to get today after such a massive move yesterday, a move that we haven't seen since March. Just the fact that it didn't dump in the Globex is a really big deal. That's a really big positive. The dollar is still holding that range, still holding those lows. The bonds sold off significantly last night, just kind of moving back down into that range. It's fine. We want both of these markets to stay sleepy, just hold their level into the weekend. We don't want to see significant moves in here on either side. We are starting to get a little bit of a 15-minute head and shoulders, inverted head and shoulders here. We don't have it yet. Let's see it follow through. For the bonds, we want to see it stay beneath that 160.10, right? And for the dollar, we really just don't want it coming back above that 94, say 94.10. It'd be a pretty solid line in the sand. Continue to use the VIX for your validating feature. I did put out a trade yesterday, a hedge, just a straight call in the VIX, and then we paid for that straight call with a put credit spread, both expiring very close to the same time frame. The put credit spread in SPY is what we used, and it wasn't quite big enough, but it covered most of the risk. And the market says we should just buy hedges and be willing to lose that money. Okay, I mean, I'm willing to lose the money from the hedge because it's insurance. We're supposed to be able to, when you buy house insurance, you don't want the money back, right? The only way you would get your money back is like if your house burnt down. So you pay the insurance hoping to never get your money back. That literally is a hedge in the market. So when we buy a call in the VIX, we don't want it to win. We expect it to lose. So, we take $200 and buy a call and we hope it loses. And the market says we should be acceptable with that. And I am, but why not put on a SPY credit spread at the same time? If the market crashes and burns, that SPY credit spread is going to lose, but that's what the hedge is for anyways. If the market doesn't crash and burn, then the SPY hedge or the SPY credit spread should generate, about 150-ish, maybe close to $200, and it covers most of the loss from the call VIX. Then you are basically carrying a free hedge. Do that. That's a good way to do business. Keep your eye on the bonds. Keep your eye on the dollar. These are going to be the early warning alert system for today. You see either one of these start to break into a significant move in either direction, then expect to follow through in our markets. Trading view, S&P 500. I did filter it down to 100 names, and we're looking at change percent. A lot of green across the board. One financial name in the red. Now remember, it only changes colors if it's moved more than 0.51%. Down or up. So a lot of these gray names, they're either flat or up slightly, down slightly. So when you look at it, finance is looking really, really good this morning. Nice follow through from that earnings yesterday. Not just finance, though. You can see electronics, technology, services. Everything's looking really good this morning. The fact that we did not dump, again, I just got to keep saying it because it's a follow through day. Right? And you can learn more about follow through days from IBD. They're the kind of the ones that coined the phrase follow through day. When a market is in transition or is under pressure, we look to either start really small swing trades or we don't start any new swing trades and we wait for the follow through day. And that's what we got. Looking at the NASDAQ 100, we don't need a filter. We're looking at change percent. And again, a lot of green names. Retail is on the table today. That's what the economic agenda is, retail. But banks are also on the table, of course, because we still have banks reporting earnings. How many names are up at least 0.25% this morning in the S&P? Half. Over half of the S&P this morning is up at least 0.25%. For the NASDAQ, 34. Now remember, the NASDAQ 100 does not have financial names. It has, if you want financials, you got to go to the S&P 100. So out of these names in here, want to try to follow them back. And we don't have a really good way to do all the sectors out there, right? Not like this. Thinkorswim can do a really good job with the sectors, but Thinkorswim doesn't do a really good job at pre-market. It's just the way it is. When we look at weekly options sorted by change percent, this is companies that have weekly options and are moving in the pre-market. And you can see that we've got a long list of green names, but not a long list of green names that are up more than 1%. Not like yesterday, right? So then when we start to scroll down and say, well, how many are up at least 0.5%? Quite a bit, a significant amount. Ford was an inside day yesterday. Inside days and red to green days are really nice follow throughs. Be keeping an eye on anything that has that kind of pattern or setup or opportunity. All right. I kept this up just to be able to come over to it. Follow through. NASDAQ follow through day. And we are back in a confirmed uptrend. This is what I was talking about, where they draw a line in the sand and they say, well, we're not in a confirmed uptrend. Then, every new rally needs to be taken with a grain of salt, that we ease into position a little bit at a time, and we look to rebuild a portfolio. And then, of course, they dig into which names have the buy signals, which ones, and they only do 3 patterns, right? So it makes things very simple and very easy. When it comes to the follow through days, there is very specific criteria. Kind of just flip through the names in here. We did share some of that information in the chat within the Bullish Bears Discord yesterday. There is talk about Bitcoin this morning because of the opportunity for ETFs. It's been something that has, every firm out there has been asking for permission to build an ETF on blockchain and Bitcoin. If that passes for America, because America doesn't have it, but other nations do around the world, that's going to be a really big deal. And it's part of the push that we're seeing in Bitcoin right now, running very close to 60. Heck, for all I know, it already went past 60. The crypto names that I use, this is kind of my own little homemade ETF. It's a really great way of kind of keeping an eye on the cryptos. TrendSpider does a good job in pre-market of showing those names, so we can see, well, how many names are up in the crypto space. Almost all of them, right? And it's not necessarily exactly crypto. It can be blockchain technology, either way, right? A lot of these names, and if you look at their cost, they're not exorbitant. They're not overly expensive. So these can be day traded as shares of stock. Options, if they got them, be very cautious about their options, right? You don't want to get into junk. You see the airlines are doing good this morning. These cloud names and big mega cap companies, they kind of was doing really good yesterday. I'd look for some follow through in here. And of course, when we have financials doing good, we really want to look at energy. And when it comes to finance and energy, there are subsectors and sub industries that are worth digging deeper into, right? Because if you say banks or finance, are you talking just banks or banks and credit cards? What kind of credit? What kind of institutions? Trading institutions, small regional institutions, big banks? What kind of finance? Same thing with energy. Is it energy exploration, energy transportation? What kind of energy, right? So kind of digging deeper down in there. The TD Ameritrade website, not Thinkorswim, but their actual website, has a really great sectors tool that you can use to dig very, very deep down into a sector, into a subsector, and really kind of narrow your focus onto the brightest names in that list. And again, energy is a field where there's a lot of cheaper names that you can day trade as stock, get into their options, maybe a little combination of both. That's what I got for you guys. Have a good weekend. We will be doing, well, let me see. I don't know. I've got a construction project this weekend. I'm putting in my sliding glass doors in my office to go to the outside. So I don't know if we're going to have an advanced options class Saturday or not. I guess I will let everybody know later on. Today I'll be streaming in the futures room, and that will wrap up the weekend. Be careful, be safe. I will see you all Monday.